the man, the myth, the legend, the God, Gareth Soloway. What's
Hey
up,
guys,
buddy?
how you doing?
Good. How you doing?
Good. I gotta love that intro. I appreciate that.
Yeah, I would have done my my announcer like Bruce Buffer, but my voice is a little raspy. People keep asking. It's just allergies. Wind kicks up around this time of year. But Gareth, thank you so much for joining us. We know you just got back from Dubai. You had your own like booth, man. I believe you were doing like live TA. How was Dubai, man? Was there anything revolutionary you saw or something that really excited you?
I mean, I'm trying to think of, there's so much, right? There was like a flying car, a hovercraft. I mean, I'm like, where do I get one of these things to be able to skip the traffic and just jump up above everyone? But there was some really cool stuff. The cool thing about the Dubai event is that the crypto side of it is just 1/10 of it. It's all about like technology, innovation, and everything else. So really, really cool. But it was fun. Yeah, we did have a little bit of a booth. I did live TA. I did some good interviews there. And, last year when I was there, I talked, Bitcoin was at 65, 69,000. And I said it was going to 20 and everyone kind of rolled their eyes. And then this year, there was no rolling of eyes here in Dubai this year.
What's the opposite of rolling eyes? That's probably what people were doing to you.
Yeah, their mouth and their ears were wide open, I don't know. But no, it was cool, man. By the way, Dubai is a cool city. I mean, Vegas is awesome. I love Vegas, but Dubai is a pretty nice close second. Just amazingly clean and safe, and restaurants, food, everything. I mean, it's got to be the Dubai of the Vegas of the Middle East there, minus the gambling. They're not allowed to gamble.
No gambling. Well, that's no. Pretty sure that's probably a good thing. But anyways, Gareth, I don't want to waste any time. I know we only have you for a little bit because you are a busy man. Let's talk about macro a little bit, if you don't mind. Just in general, right? Have we seen a market bottom for the stock market? And if not, like, what's your time frame? And are we going to see just a like sharp decline, or is it going to be a steady ladder down? Like, what are your thoughts?
Yeah, so I don't think the markets have bottomed yet. The equity markets certainly have not. I think Bitcoin and crypto is closer to bottoming than the stock market, mainly because I think you have that goldish type safety play that eventually Bitcoin will turn into, right? So as the macro gets worse and worse, and people get scared of being in stocks and the economy, the idea of turning towards a Bitcoin definitely makes a lot of sense. We're not there yet, so I want people to understand that. But at some point, 12, 13,000, wherever it may be, I do think Bitcoin bottoms out and then starts to grind up. The macro is going to be a tricky thing. I really think we're in for a long period recession, mainly because the Fed can't bail us out. If we look at the past 10, 20 years, every recession or every market dip, like the COVID collapse, the Fed was just printing money. Well, that was great when we have 2% inflation or less, but now we have 8%. And even if it drops to 4%, how does the Fed print us out of a recession at 4%, which would cause inflation to potentially spike to 20%? So it's going to be one of these longer periods, which I think is a great opportunity for crypto overall, because you're going to see these new technologies, these other ways to kind of figure things out coming to the forefront. So I would say just prepare. People should prepare for still some more volatility. Maybe another next leg lower in Bitcoin, but the buying opportunity is coming.
Now, I've said this numerous times, and I'm curious to get your take, right? I believe when people's backs are pushed up against the wall, you have to do things you don't ordinarily do, right? And so a recession hits, you're not going risk on. Gold isn't really moving, right? You can probably say other precious metals, fine. Treasuries, U.S. Treasuries, inflation's so high, right? And so where are people going to put their money? And so even if you put it into 30-year bonds, right, or treasuries, and you get 3, 4, 5%, you're still not beating inflation. And so my thing is, this could be a catalyst for a narrative switch into where people say, okay, well, what else is there? And they look at crypto and Bitcoin and say, hey, we have an asset here, a hard money asset with a limited supply, with a decentralized network. Can you see any scenario where we're in a deep recession and Bitcoin actually benefits from it?
Yeah, I absolutely do. I think for us to get to that point, number one, we need to see more maturity in the crypto sector. So we look at an asset like Bitcoin that's only 13 years old, right? So it's very young in the scheme of like the stock market. I mean, if you even looking at just Apple's been around since the 80s, so it's 40 plus year old company. So I think you need to see that. I also think you have to see regulation. I know everyone loves the decentralization aspect, but at the same time, if you're going to actually turn Bitcoin and other cryptos into like a safety haven, then you need to know the rules. I need to know the rules, right? So I'm allocating some of my capital towards crypto, but at the same time, there's no way I'm putting like a few $1,000,000 in crypto because I don't know what the heck the government's going to do. Right. And I don't want to be caught with my pants down, if you will, in that scenario where they come out with strict rules and Bitcoin dumps out by 80%. I don't think that's going to happen. But the point is that you have fiduciary responsibilities from a hedge fund perspective, pension funds, and that's the money we need to attract to crypto. You get pension funds alone to buy in like 2% of their pension fund into
Oh my
Bitcoin,
God.
and you're at like 300,000 overnight, right?
Oh yeah.
So the only way that's going to happen is if we get the rules. Like, just give us the freaking rules already. Don't drag this out, because honestly, that's what's hurting crypto right now, is that we just don't know what rules we have to play by.
I agree, and especially the institutions as well.
Now we've heard a narrative switch when it comes to the CFTC regulating Bitcoin when it comes from the SEC. And do you think that the SEC might be turning a corner? I'm not sure how far your expertise is in the SEC, but do you hear any rumors of perhaps a spot Bitcoin ETF being sooner than later? Because I feel like they just keep denying all these Bitcoin applications. And we had Grayscale sue the SEC last week. And do you think we're going to make any headway in that direction with the SEC? Or
Yeah, I do. So I think that the first thing is, right. So as soon as I think the SEC will approve the ETF for spot, as soon as they lay out the groundwork. They probably won't do it ahead of time, because like imagine if they allow the ETF to come to market, you get a bunch of investors in there, and then they throw a curveball of like regulation that we didn't expect, and then everyone who just invested loses like 80% of their money or something like that. So I think they'll wait for that regulation first. And then as soon as that's in place, as soon as they kind of announce it, I think within probably like 3 to 6 months, you'll see an approved spot ETF. So I think that's exciting. That's going to give investors in stocks, like people that don't have crypto accounts, which, let's be fair, there's still a massive amount of people that don't invest in any crypto. Yeah. That's going to give them an avenue of comfort to invest. And you'll probably see like I've even envisioned a gold Bitcoin ETF, like where it kind of like there's a allocation into gold. And so, I mean, it could almost draw you into this dual safety haven, right? So you think it's the digital gold, but then you have the actual gold, and it could be kind of a cool idea too. Though there's so many opportunities out there once that spot ETF is approved.
Amen to that. Now, I'm going to keep this next question very broad. What the hell is going on in the bond market, whether in the US and the UK? And if you have charts, please feel free to show them. I'll just leave it at that.
Yeah. All right. Yeah. So let's definitely talk about the charts, and I'll bring up my chart. Let me just bring up one of mine right now. So right now we have what's called an inverted yield curve, and basically an inverted yield curve means that this is the 2-year yield, and the 2-year yield is just under 4.5%. Now, in theory, or in reality, really, what it should be is that the longer you tie up your money, the bigger the return you should get, because you're tying up your money for a longer term period. So you need to demand a higher return. Well, right now, if you tie up your money for just 2 years, you're getting 4.5% on your money. If we go to the 10-year and you're tying up your money for 10 years, you're only getting 4%. Right. So that's what we call an inverted yield curve. And basically what that tells us is historically that signals recession. It's almost never does that happen without a recession occurring. So you have to think that the US economy and maybe global economy is heading towards a recession. Now, what we've seen going on with the UK is basically the Federal Reserve has said, we're raising interest rates, screw everyone else. Let's just keep raising by 75 basis points. And the problem is that you're starting to see breakages. So basically, if you think about it, we had the Fed funds rate was at 25 basis points like a year ago. And all of a sudden, we're at 3.25. So think about the X times. We always talk about how many times is this coin going to go up exponentially. Well, the 10-year yield or the Fed funds rate has gone up hundreds and hundreds of percentage points to go in a very short amount of time. And what you're seeing is that the system globally cannot handle that. Right. So again, we're seeing this breakage going on. We saw the Bank of England coming out and saying, hey, listen, we have to actually start almost like a pseudo QE again by buying bonds. And it's one of those things where the Fed, to be honest, I think the Fed is absolutely insane. You need to raise interest rates, or you should have been raising interest rates. But what I think they're doing is they're playing catch up. And it's never a good scenario to say, oh, my goodness, we were behind the curve. So now let's just pile on and crush everything. And I also think like what we have from COVID is a unique situation where you had investors or just citizens stashing money during COVID because they weren't driving to work, they weren't traveling, all these things, and they were paying down their credit card. So the consumer is remaining very resilient because they have all this money on the sidelines. At some point, that money runs out, and this economy takes a cliff dive with all these interest rate hikes from the Federal Reserve. So I think by mid next year, we're in a very tight economic situation. And it's very possible you could even see rate cuts by mid 2023, which I think could coincide with maybe the bottom in Bitcoin.
Fair enough. And I think you hit the nail literally right on the head is why were they not raising interest rates when they started issuing all these stimulus checks, knowing that the pent-up demand was going to destroy the supply chain? Right? They should have slowly started raising these interest rates, then got us up to the 2.5 to 3%. And then now when inflation starts getting high, you can slowly go up versus
they were in denial. They were in denial.
Yeah,
they kept saying
remember
transitory.
How many times did Jerome Powell say transitory at every press conference?
Dude,
Like
how are these people leading our
Janet
country?
Yellen, it was Biden. Everybody was dropping this transitory thing, and it's just like they're drinking the same Kool-Aid, and it was just like, hey, look, like you.
And the thing is, like, this is what drives me nuts, right? Is that this is just the latest example of the Fed being totally wrong. You could go back to like 2009. You could go back to 2000. In 2018, they started raising rates. In late 2018, the stock market collapsed like 20%, and then they started cutting again because they didn't want to let that happen. Then you go back to 2009, literally Lehman was failing, and then they're like, okay, maybe we should do a little stimulus now to offset that. And so they're notoriously late to the party, and they just try to play catch up, and then they go too far the other way. And I have no idea why. I mean, I don't know. It's a mess, and they have never shown their ability to actually do things right, in my opinion.
You think they're going to be late to the party on easing up on the interest rate as well on the back end? Basically, say we go deep into a recession, or what do you think?
Yeah. I do. And I think what's going to happen is they're hiking rates. Number one, we have to think about it like this. So when Volcker was around, interest rates were like 12%. He hiked them to 18%. That's a big hike, 6%. But if you think about it in percentage terms, it was only a 50% raise from where we currently are, 12 to 18%. Now, if you look at where the Fed funds rate was this time, you're talking like 500, 600, 700%. Right. So the impact on the economy is going to be exponentially bigger than what we saw in the 80s. And I think that what we're going to see is the Fed saying, okay, we see the economy slipping into recession, but they'll be like, just like transitory, they'll be like, oh, it's going to be a mild recession. It's going to be mild. Then it's going to get so bad, and they're going to say, well, we can't lower interest rates because inflation's still like 4%. And then it's going to get worse and worse. And finally, they're going to be like, holy cow, we're in like a depression almost. Now we got to cut rates really fast, play catch up. It's going to just go around and around. It's
going to be a nightmare.
Here's one thing. I've heard multiple times that if they were to raise the interest rate to say like over 5%, it would break the economy. And that it's different times now than it was before. What does a quote unquote break the economy look like? So let's just say hypothetically they got to say 7% the Fed's fund rate, and they triggered this what people have analysts have been saying, breaking the economy. What does that look like? What is in your kind of scope breaking the economy look like?
Yeah, so I think number one, it's a deep recession, maybe close to worse than that. It would be breaking where things just start to collapse, and you have all these things that are connected. You have derivatives, you have the stock market, you have pension funds, all these things, and what you'll see is a breakdown where you start to see these failures going on in the system, where the Fed has to start plugging it. And we even know that the reverse repo market, which is the money that banks park at the Fed on a nightly basis to earn interest versus lending it out. We're literally at $1 trillion a night, a day, basically. And what that tells us is that the banks are no longer lending money, and that's showing you that we're starting to see a freezing up in the credit system. So I think all of these things are precursors to a bigger breakdown. But I mean, I think when they say breaking the economy, it is literally you're looking at a recession that we can't get out of, maybe stagflation, which is kind of the worst of all scenarios.
That's a good point. Gareth, I want to pivot to oil. Okay. So we know the U.S. administration has been releasing oil from their strategic reserves for the past few weeks, and they are below the threshold of where they need to be. And so you have OPEC came out, said they're cutting production by 2 million barrels a day. You have the U.S. who's going to stop releasing by the end of this month. I believe October 31st is the last day they will release oil. So they're going to have to replenish those reserves. So what do you think is going to happen to the price of oil, to the price of gas, when you have OPEC cutting, the U.S. government going on a buying spree, and then just people naturally needing gas and oil?
So the common theme would be that oil should go up. I actually take the opposite side. I actually think oil is going to continue to fall, not because those aren't bullish signals, right? I mean, number one, when OPEC cuts, from what I heard, they said 2 million barrels, but I heard that they were underproducing by 1.3 million already. So it really turns out to be about a 700,000 barrel cut. So it's not as drastic as it sounds, just because there's a lot of refineries that are down and have been down and so forth with capacity. But I think the key is to understand that the slowing in the economy that is taking place already is going to be so much more dramatic in terms of the reduction in demand for oil versus just the strategic reserve, needing to be replenished. So for me, I think oil's headed much lower. I see by 2023 sub $50 crude oil. And I know that's counter kind of to what everyone's thinking, but remember that if you take the global economy, and we're looking at China, we're looking at Europe, we're looking at, basically all of the countries inclusive of the US, and you just slow down growth by like 2%, you're probably like at negative 10 million barrels a day in less demand. So it should actually be okay. I'm not surprised that they released the strategic reserves. We knew that the elections were coming up, so they had to try to drive it down. But just the Fed hiking rates is slowing things down, and that'll do its job and bring oil in.
And surprising enough, they stop right when the midterm elections happen. So,
yep,
coincidence?
That's right, man.
All right, let's shift into crypto. What the hell is going on with Quant? This thing is like ripping. It's up 100% over the last, I think, 10 days. Just broke $200. What is going on? When is it going to stop? What's a good entry point if you're waiting to get into Quant?
And we were having a discussion here. I was like, man, Quant feels a lot like Polygon did during the run up, where I saw it at like 15, 18 cents. It rallied up to like 30 cents, 40 cents. And I was like, I'll just wait for the pullback. And it never came. It just blasted all the way up to $1. I might have taken a month or two, but it never had any significant pullback. And I'm like looking at Quant, I'm like, damn, did I miss the boat?
Can you guys give me a quick education on like what makes Quant unique? That you guys
They're essentially a software as a service. So they're a layer 0 essentially blockchain. Their founder has vast expertise in government, Federal Reserve, treasuries. And so Quant's been kind of labeled as a leader in providing the infrastructure for CBDCs. Great tokenomics, only 14.5 million tokens. So they're like the leader in this whole CBDC thing.
So could we draw the conclusion that maybe insiders know that there's going to be some announcement on some like, dollar dollar coming out, new digital dollar. I don't know. I'm just, that would be so interesting to think about that. I just drew that comparison, but I'm just a speculation on it.
Well,
I don't think there's insider trading going on. Right?
There's been a lot of building when it comes to the CBDCs. So I think they're trying to find themselves on what platforms. I think everyone thinks it's going to be a winner take all when it comes to CBDCs. I do think that in the same way that the U.S. Has multiple contracts and partnerships with private companies for all their sectors, I don't see that CBDCs are going to be any different. They're probably going to leverage 5 or 6 different blockchains when they do go down that road. And Gilbert Verdian, which is the founder of Quant, has a lot of ties when it comes to governments, also the UK government as well. Yeah. So everyone always associates CBDC with the US, but I think it looks like they might be in the running for the CBDC in Great Britain. Is kind of a buzz, and so
they also have a patented overledger technology. So, but what are the charts saying? Like, when are we going to stop? What, like, if you're looking to get into quant, what levels should you be waiting for?
All right, let's take a look here and see what we got on these charts. Because I actually do see something that was kind of a precursor that was giving us a heads up. This might have run. And again, I don't look at a lot of these coins, but one of the things I see is an inverse head and shoulder pattern. So it's always fun to look at these. So basically what an inverse head and shoulder pattern is you have like an upside down human, right? So here's your shoulder, here was your head, here was your the rest of the head, and then this was your shoulder. And this is a classic bullish setup. And there's your breakout right above what we call the neckline. You basically take the armpit, if you will, of the inverse head and shoulders, and you connect that trend line. So once it got above here, this was the breakout. And I'll give you guys a little sneak peek at some pretty cool technicals here. You can actually analyze the head and shoulders and come up with a target. And the way you find the target is you take the low of the head and you do a vertical line to the neckline. And basically you take that distance, and that should be the explosive move to target. So if we do this here, $40 to 140, right? So 140, so it's about a $100 move from this low to the line. And then from the breakout, you should get a $100 move as well. So if we take from 125, basically, you know what the target was?
225.
225. And look at the high today. Is that freaky or what? So just on pure technicals, this would be like, okay, this might be a short-term top. And by the way, this just gives you a target in the near term. It doesn't mean this isn't going to go higher in 3 months from now or 6 months. I mean, it could go to 1,000, whatever. But just fascinating how a calculation like that can give you that target, and there it is. So it looks like, to me, I would be like, if I was in this, I'd probably be taking at least half off the table, playing it conservatively. And then you can always rebuy that on a retrace. And I'll show you one more thing here on the chart. Yeah. So where would I buy this, right? So let's say, all right, target's been achieved with the head and shoulders. The place I would buy this is what we call a retrace to the scene of the crime, which would be back to this trend line. So basically, this was your breakout, the scene of the crime, as we refer to it. So usually after the breakout, when it consolidates, it finds its way back to that line. So you'd be a buyer around 120 to 125 on a retrace.
So 120 to 125. The scene of the crime, I like that. That's the beauty of TA, right? You just look at numbers and probabilities and you take emotion out of it. And so, Quant is something that I know me and Robin really like. I know our team likes as well. It's just like, you don't want to get on a train that's going 100 miles an hour. You want to wait for it to get to the next stop. And so we were curious when the next stop was. All right.
Yeah, and I would just say, just in general technical trading, you never want to chase, right? So just like when Bitcoin was at 65, 69,000, anyone who got in there got hammered. Same thing with this. You look at this and going back to early September, it was at like $80. You never want to be that person that's paying, like 100, 220 or 225 for it. I always liken it like in investing, people need to kind of think like as if they're shopping at the mall. And what I mean by that is like, if you go to the mall and you're like, oh, I love these jeans. Last week they were on sale for like $100. This week they're on sale for $500. You don't say, oh my God, let me go buy these $500 pair of jeans, right? We say, nah, like that's ridiculous. I'll wait till it's on sale again. Treat crypto, treat stocks, treat commodities the same way. Wait for them to come back in because they always do.
Amen to that. And don't get greedy.
Yeah.
All right. I want to pivot to Chainlink, okay? The gold standard for oracles. What every single smart contract needs essentially is an oracle to feed in real world data in real time. Now, Chainlink is coming out. They changed their tokenomics, so they're introducing staking, which will take supply away from the active traders. Now, what are the charts saying on Chainlink? Has it bottomed in your opinion? And what are some levels you're looking at, whether if it's you're already in, looking to take profit, or waiting to get in, or should you just get in now?
Yeah, let's take a look at the chart here. So basically on the chart, we've seen that just like Bitcoin, well, this actually bottomed earlier than Bitcoin. This bottomed back in May versus Bitcoin's low was in June. But it looks to me like you have some sort of channel here. So let me get my parallel channel and draw a line in here. We'll connect these lows, and then we can kind of drag it up here. And it looks to me like you're trading inside of this range. As long as this lower trend line holds, I think Chainlink is okay. It could go to the high end of the range around $10. But just if you're in this, or if you're looking to get in, just be careful you're not a buyer if it breaks. If it breaks, that would be the signal to stay away from it. Now, let's be clear on this. This pattern formation, just like Bitcoin, unfortunately, if you put a trend line here, this big drop with all this sideways chop, this is a macro bear flag, or in spirit of bear flag. So it tells me at some point it's going to break lower. But in the near term, it still could pop to the high end of the range before coming back in. So I would say near term bullish since it's on support, but just be careful over the next 3-6 months as it could easily break down. Amazing.
All right, what's Bitcoin looking like? I know the Bollinger Bands started kind of getting a little tighter, which typically, precludes a big move coming. What's your kind of like by the end of October outlook on Bitcoin, and maybe through the end of the year going into next year?
Yeah, because we've been in this, I'm looking at my charts here. We've been in this 20K zone since August. And so we've broken below a couple times, above a couple times, but we've just keep sticking to this 20K mark. And it's
Isn't it amazing how
one week it's support and the next week it's resistance, but yeah.
Crazy. Like who would have thought that Bitcoin would be less volatile than the stock market, right? I mean, that's really what it is though. But looking quickly at the charts, there's a level I'm watching for a potential near-term breakout. Now, let's not fool ourselves. The bigger pattern is still bearish. So you have the big drop and the same kind of thing as Chainlink going on. But look at this trend line from this pivot to this pivot high to this pivot high right down. And look at how Bitcoin's trying to break out. If it can break above this, I think you get a short-term short squeeze where this could at least see 22.5, maybe even 25,000. So again, that's kind of how I'm favoring. I think there's a lot of bearishness because of how dead Bitcoin has been. And I think you might get some sort of breakout here in the near term. I don't think it's a long-term breakout. I still think the longer term, you're still stuck inside of this longer-term range, which is bearish. But it doesn't mean as a trader, I can't make money in the near term on the long side if we get a breakout. So short term would be neutral to bullish, I would say. Longer term, over the next couple months into year end, I'd be worried that by year end it starts breaking lower again.
And you've come out and said 12K is in the cards. Is that still your target price for, let's say, a bottom, or are you kind of moving that around?
Yeah, so I mean, at this stage, I think that's my high end. I hate that everyone is saying it now, right? I mean, it's one of those things where we all know when everyone starts talking about a level, that's where it's like, okay, well, it's either not going to get there or it's going to go below that level. So I still think, I've been racking my brain and I'm like, okay, well, if the stock market still has like 30% downside, which I think it does, how does Bitcoin not at least go down 30% or more, right? So it's a tricky scenario here. I would love to see that pivot on Bitcoin where it starts to go up when the stock market goes down, but it doesn't seem quite yet to have that maturity of Bitcoin at this point.
Just my own personal sentiment, charts aside, I just have this feeling that with the midterm coming up, it seems like the entire market, S&P 500, legacy finance, also crypto, probably due for a bounce. And then, I don't know, I just think a bounce in the cards and then a further pullback afterwards, psych out. I don't know, that's just kind of what I'm kind of feeling. I'm not sure.
I think, no, honestly, I think that makes a lot of sense. And it's important for us as traders and investors to kind of think about these things logically. Just like, the months going into the midterms, it didn't make sense for oil to still be at 120. There's no way it was going to stay up there going into midterms when you got to get votes. Same thing with the stock market. You can't have the stock market dropping another 10% in the next 2 weeks going into the midterms. People aren't going to be happy about that, right? So it makes sense that maybe we get a short-term bounce, which then should benefit crypto as well, going into the midterms. Then once the midterms are over, then whatever, I guess.
All bets are off, huh?
Yeah.
Gareth, are you familiar with the Mango Market, that little hack they had where hacker came away with $110 million?
I think I've heard of it, but I do not know details about it. But you guys, I'd love to know more about it.
Yeah, so it was a DeFi protocol on Solana. So apparently they found this trading group and they doxed themselves on Twitter, which, by the way, let me just go ahead and show that right now. And so they're talking about this thing, and I'm going to go to my laptop here. So this is the guy right here, Avraham Eisenberg. He said he was involved with a team that operated a highly profitable trading strategy last week. I believe all of our actions were legal open market actions using the protocol as designed, even if the development team did not fully anticipate all the consequences of setting parameters the way they are. Now,
so just to give you just a little bit more insight, you had they had a DEX, so decentralized exchange that runs off of smart contracts, and the Oracle service that was used there got exploited. Basically, it was whale manipulation. They basically took out different positions, and it artificially inflated the price for a very short-term window, which then he put it in positions. Anyways,
and they used that fake inflated amount to leverage and borrow Solana tokens and
just basically
Bitcoin.
He just pulled all liquidity from the platform. And so at first it was this, hey, don't prosecute me, and we will return some of the funds. And now he's just basically saying, hey, this was fair game. I just played by the markets. I know in legacy finance you have manipulation laws in place where you can, essentially serve time for doing this exact scenario. Am I right on that? And it's kind of what's your overall thoughts about this happening in crypto markets? Do you see more of it, or do you see kind of regulation coming for this?
Yeah, so I mean, you're right. In the equities market, stock market, there's definitely that's a big no-no. You can go to jail for sure doing. And we know it as pump and dumps, which happen in any asset class potentially. But it sounds to me like, I'd have to know more about the inner workings. But if he was playing by the rules and there aren't strict rules about it, maybe he can get away with. My guess is he talked to lawyers, right? And they probably looked at it and said, because if initially he was saying, oh, I'll give some of the funds back, and now all of a sudden he's like, no, he probably talked to some legal experts, and they're like, dude, you did nothing wrong here. Now, does that mean that he, in the future there needs to be regulation so this stuff doesn't happen? Probably, right? So it's another example of something going on where we just need a book of rules where people don't get burned. Because I think that's the biggest thing, right? With crypto, it's like it's the Wild West, and that the average person that doesn't know anything, those are the people that end up getting burned, and it's not fair to them when you could say, oh, let's screw them, they should have known, but you just need these rules to make people feel more comfortable, especially if you want the mom and pops to invest in crypto and kind of make this a longer lasting thing.
Okay, that's great insight, and I don't know. Maybe we'll see some of that regulation coming to crypto, but
the dude also walked away with over $100 million. So I'm sure he had budget to afford a lawyer.
He only kept a certain amount. Yeah, he only kept a certain amount. But the fact that he's saying, "Hey, this is legal. This is on you,"
a little concerning, too,
right?
Yeah.
This you built this thing. I just used it. That's like Donald Trump saying, "Yeah, I declared bankruptcy 7 times, but these are the rules. I played by the rules." And so, an ethical no, but hey, what are you going to do legally? All right.
Gareth, when $100 million is on the line, ethics sometimes goes out the window.
Yeah, no crap, right? All right, Gareth, before we let you go, can you take a look at ETH? I've been saying, and I've been following ETH on the daily. I've been saying that ETH has been in this massive bull flag. The Bollinger Bands are kind of getting tight. And I've said there's going to be a big move coming for ETH. Are you seeing similar things on the chart? Are you seeing something different? What's your outlook? What are the charts saying?
Yeah, so it looks to me, and let's bring up the chart here of ETH, is that you're basically in what we would refer to as a wedge pattern, right? So you have this line here sloping down, then this one connecting the recent lows, and you're hovering right on support. So for me, it's one of those scenarios where, kind of like a couple of the other ones we looked at, is that as long as it holds this line, you look to attack this area here, and if it can break out, then you start heading up to the next resistance, which is a line from the all-time high on ETH down to this secondary high, which looks to me to be around 1750 or so up here. So to me, there's no definitive like this is going to bust out here. Since I'm bullish on Bitcoin, I would say that I'm slightly bullish on ETH as well, just because they tend to move together. But really what we need to see is this line broken here, which would be your short-term resistance, and then you can get that pop to, basically 1750 or so.
Now, if it does break that lower trend line, where do you think the stop market, where do you think how far down do you think it's going to go? Like if you had a confirmed breakout on there.
So if it breaks here and starts to kind of go lower, you got to be looking at back to that sub $1,000 level. And again, no one wants to see it there, but if once you break this line, there's really not much support until you get down to these lows and then this low right down here. So yeah, you're looking right around $1,000 if it busts down there.
Now, Gareth, I know you, and I believe this is still true. I know you have crypto that you just trade in and out of. I also believe you have crypto that you hold on to, correct?
Yes. So just like any trader or any investor or any person that's been through the ringer many times in trading, like myself, and investing, I'm a big believer in trading it, but also that if you have a bigger thesis, then you want to be invested for a longer period. So basically what I didn't buy, I was all out of Bitcoin aside from trading it until we got below 20,000. Once we got below 20,000, when we hit 19, even though I think it's going to 12, 13, maybe even sub, I decided to take a chunk of money, let's call it, I don't know, like $300,000. And I took it, I divided it into 1/6 amounts. And I put 1/6 of that to work at 19. And then the idea is that as it drops every 3,000 or so, I'm just going to add another 1/6 and kind of be very robotic as an investor to dollar cost average in. Because again, for all I know, it's bottoming here. I mean, again, the charts say right now that probabilities favor a move down, but I could be wrong. And I don't want to miss the train on the upside as well. So I love the long-term thesis on Bitcoin and crypto. So I'm just kind of inching in here. If it drops to 16, I'll add more. If it drops to 13, I'll add more, 10, 7, etc., all the way down. So yes, I'm a big believer. Don't ever have a hard line in the sand because you might be wrong. If you like something enough for the long term and you think you're going to go to 100, 500,000, don't be a stickler over a few $1,000.
Fair enough, right? What does Kathy Wood say? Don't try to time the market. Have time in the market, right?
Exactly. I call it my shotgun effect. So like, you fire a gun, it's one bullet at one target. If you do a shotgun, you're just kind of spreading out those pellets and likely, as long as you're getting in the general range, your dollar cost average in.
There you go. Aim for the center mass, right?
Yep.
All right, Gareth, before we let you go, Robin, you know what's coming. A very important question, Gareth. What are your thoughts on barbecue chicken pizza? Are you for or against?
Well, I like barbecue chicken pizza, man.
Oh,
my man. You know, I get so much hate. So our producer Rocco, he's straight from Italy, right? Italy's known for their pizzas. We were visiting BitBoy in Atlanta.
It's not that. It's not.
And I ordered a barbecue chicken pizza, and this man gave me the Joe Pesci look, like he was getting ready to grab some floss and strangle me.
I like how you said Italy's known for pizza. Like, breaking news, everybody. I know y'all thought it was associated with Mexico, but
I'll tell you guys a quick story, like 2-second story.
Yeah, please.
So I'm from New York originally, from Long Island, so I'm used to all that great pizza and all that stuff. And I've lived in Florida now for a while, in Oregon for a while as well. And I went back to meet a client in New York for the first time in years, and I legit spent like $100 on myself at a pizza place. And then by the end, I was it was so good, but I ate so much that I was
damn,
like legit sick.
What'd you order? $100 in a pizza place?
I needed it.
It's a good move. I like
I was in the gym for 2 weeks straight after.
That's right.
Gareth, you are the man. Can you tell everyone if they want more Gareth Soloway, where can they find you?
Yes, absolutely. On Twitter at Gareth Soloway. You see In the Money Stocks. If you're into stocks and technicals, that's where you find me there. I have Verified Investing Crypto, which is just cryptocurrencies and daily video trading. And then my latest project is Verified Investing Education, which is basically analyzing charts, learn everything I've spent 20 years screwing up to learn up to this point, how to trade profitably and kind of analyze charts, the mindset of a trader, how to be disciplined, all the things that you have there. That's in a 3-course series called The Winning Trader at Verified Investing Education.
Amazing. And we do have the link to Gareth's website in the description of this video. Go show him support. Gareth's been in the game for a long, long time. Gareth, we thank you so much. We appreciate your time and expertise, and we hope to bring you on our show once again. And today was a very special day. You were a part of it. We hit all-time high on viewership here at Sin City Crypto. So thank you, my friend.
We'll see you. We'll see you on Around the Blockchain.
Yes.
We're on there as well today.
Heck yeah, man. Again, thank you guys for having me on. It's been a true pleasure.
Gareth, it's our pleasure, my friend. Enjoy the rest of your day, and we'll see you soon. Take care.
Thank you.
Bye-bye.